At this very moment, one of the most debated and emotionally charged technology stocks across Wall Street is Palantir Technologies. It has become a lightning rod for both bullish enthusiasm and deep skepticism. On one side, you have investors who believe the company is dramatically overvalued and priced for perfection. On the other side, you have those who see a rapidly scaling artificial intelligence powerhouse that is still in the early innings of a much larger growth story. When you step back and look at the full picture, there is a compelling argument forming that this widely criticized stock could actually present a significant opportunity for long-term investors. To understand why this stock is so polarizing, you need to start with how Wall Street currently views it. Despite being one of the most prominent players in artificial intelligence software, analyst sentiment remains surprisingly mixed. Out of 28 analysts covering the company, 17 currently rate the stock as a buy, 9 recommend holding, and 2 suggest selling. While this distribution does not reflect outright negativity, it clearly highlights hesitation. A meaningful portion of analysts are not fully convinced that the stock has substantial upside from current levels, even as the company continues to post strong operating results. This disconnect between cautious sentiment and undeniable business momentum is exactly what makes the situation so interesting. Historically, some of the most successful investments have come from moments where perception lags behind reality. In this case, while analysts remain divided, the company itself is executing at a remarkably high level. There is no denying that the stock appears expensive when viewed through a traditional lens. Palantir is currently trading at over 82 times its forward one-year earnings, a level that would typically raise concerns even for a high-growth technology company. This elevated valuation has created a psychological barrier, making it difficult for analysts to justify aggressive upgrades, even as new data continues to support the company's growth narrative. However, valuation alone rarely tells the full story, especially in transformative technology cycles. Companies that are redefining entire industries often trade at premiums because investors are pricing in future dominance rather than present-day earnings. In Palantir's case, the market is attempting to determine whether its current trajectory justifies that premium or whether expectations have moved too far ahead of reality. Adding another layer of complexity are the concerns surrounding the company's expanding role in handling sensitive data. As Palantir deepens its relationships with governments and financial institutions, it is increasingly being entrusted with highly confidential information. A recent agreement in the United Kingdom granted the company access to critical financial regulatory data, which has sparked discussions around privacy, security, and ethical responsibility. These concerns are not trivial, and they contribute to the cautious tone adopted by some analysts. At the same time, Palantir's business model itself introduces uncertainty. Unlike a typical software-as-a-service company that generates predictable subscription revenue, Palantir operates through large-scale, highly customized contracts. These agreements often involve complex deployments across government agencies or major enterprises, making revenue patterns less predictable. As a result, analysts find it more challenging to build precise financial models, which naturally leads to more conservative outlooks. But while the concerns are real, the company's actual performance continues to paint a very different picture. Palantir is not just growing, it is accelerating. In the fourth quarter, the company delivered revenue growth of 70% year over year, marking the fastest pace of expansion it has achieved since becoming a publicly traded entity. This level of growth is not only impressive, it signals that demand for its platform is intensifying at a time when artificial intelligence adoption is rapidly expanding across industries. What makes this growth even more compelling is that it is being achieved alongside strong profitability. During the same period, Palantir reported a generally accepted accounting principles net income margin of 43%. This is a remarkable figure, especially when compared to many high-growth technology companies that often sacrifice profitability in pursuit of expansion. Palantir, by contrast, is demonstrating that it can scale efficiently while maintaining strong margins. The company's cash generation further reinforces this strength. In 2025, Palantir produced more than $2.2 billion in adjusted free cash flow. This level of cash flow provides significant flexibility, allowing the company to reinvest in innovation, pursue new opportunities, and strengthen its competitive position without relying heavily on external financing. Looking deeper into its commercial momentum, the numbers become even more striking. During the fourth quarter alone, Palantir secured deals with a total contract value of $4.3 billion. At the same time, it exited the quarter with $4.2 billion in remaining performance obligations, which represents contracted future revenue. This figure increased by 144% year over year, clearly indicating that demand is is not only strong, but continuing to build at an accelerated pace. Another key metric that highlights the company's strength is its net dollar retention rate, which stands at 139%. This means that existing customers are not just staying with the platform, they are significantly increasing their spending over time. This kind of expansion within the customer base is often one of the strongest indicators of long-term value creation, as it reflects both satisfaction and growing reliance on the company's solutions. A major force driving this momentum is Palantir's artificial intelligence platform. This platform has quickly become a central pillar of the company's growth strategy, enabling organizations to move beyond experimental use cases and into full-scale deployment of artificial intelligence. In fact, the company's United States commercial segment experienced growth of 137% year over year in Q4. This surge reflects a broader shift in the market, where businesses are transitioning from exploring artificial intelligence to integrating it into their core operations. At the same time, Palantir is strengthening its position within the defense sector, which remains one of its most important markets. The Department of Defense is reportedly working toward designating the company's Maven artificial intelligence system as a formal program of record. This designation is significant because it would embed the platform into long-term military operations and secure dedicated funding, creating a more stable and predictable revenue stream over time. Stepping back, it becomes clear that Palantir is not just another technology company participating in the artificial intelligence trend. It is positioning itself as a critical infrastructure provider in a world increasingly driven by data and intelligent systems. As artificial intelligence models become more widely available and less differentiated, the real competitive advantage is shifting toward companies that can deploy these models effectively at scale. This is where Palantir's capabilities stand out. Through its artificial intelligence platform and ontology framework, the company enables organizations to create digital representations of their assets, workflows, and relationships. This allows artificial intelligence systems to operate in a structured, real-world context, turning raw data into actionable insights. In other words, Palantir is not just building tools, it is building the foundation that allows artificial intelligence to function within complex organizations. When you combine all of these factors, the picture that emerges is one of a company executing at an exceptionally high level while still facing skepticism from parts of the market. This tension between performance and perception is often where the most interesting investment opportunities are found. Of course, risks remain. Valuation concerns are unlikely to disappear overnight, and the company will need to continue delivering strong results to justify its premium pricing. Additionally, regulatory scrutiny and ethical considerations could become more pronounced as its influence grows. However, for investors willing to look beyond short-term noise, the long-term trajectory may be what matters most. If Palantir continues to expand its platform, deepen its customer relationships, and maintain its current pace of execution, it has the potential to reshape how organizations interact with data and artificial intelligence. And if that happens, today's skepticism could eventually give way to a very different narrative. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.